Good morning. Morning, everyone. Good to see everyone jumping on. Welcome to another Wealth Coffee Chat. There you go. Hey, Jeff. Good to see you. Good to see you having a good time, mate, on your week off. It's always nice to get a few things going your way. And hey, listen, we've got a few things happening at mentoring. You reminded me, Jeff and Michelle. We're doing a live mentoring soon in Melbourne. And we're popping down there. It's going to be a bit of fun. We're planning on one in Brisbane and Melbourne soon as well. And there'll be a few invites to some locals. And if you're super keen, if you want to fly interstate, let us know. But we're going to do a live mentoring night for about 100 people down in Melbourne on the 4th of March. And it's going to be a lot of fun. But yeah. Good to see some of your dates and times are lining up, Jeff, as we roll. So, hey, good morning to everyone. While everything's sort of warming up, do a little quick intros. Jason Witten's my name. If you're new, if you're wandering by and you find us each morning, Monday to Friday, we get together, have a little wealth coffee chat about real estate, investing, and making sure we go the distance. We've got a couple of sayings. I need to get a couple of stickers. That's what I'm going to do. I'm going to get a couple of little stickers. You know, this thing's a marathon, not a sprint. It takes time to build a property portfolio, and a bit of patience, and some nerves of steel. To be honest, you got to sort of hang in there. And the other little saying, which is I think is a very important one: buy well, never sell. You know, the idea about property investing for passive income in the future. It's not necessarily passive though, is it? It's not passive, but it's low hands-on. Is buy well, never sell. You got to buy some good real estate, folks. You got to buy some good real estate. Some good real estate in a good spot. That's attractive to people who've got the ability to rent it for the right price. That's the way it rolls. So there you go. If you're new, welcome. Give us a shout out in the chat. Let us know. Love to hear from you, where you're from, what you're up to. If you feel like sharing as we go. All right, Alison's coming. Everyone's on. Chris is in. Jeff's in. Good to see, team. Great to see. We'll get some invites and stuff floating around at some point real soon. Keep an ear on that. We better get it going, I suppose. It's probably what? Yeah, probably 2 or 3 weeks away, so we need to get organised. But yeah, good morning. Good morning. So, little shout out. Nevin, Chris, Alison, Jeff, Rodney, James, Ben, Michelle, Nick, Simon, Adrian. I think I said everyone's name. Good to see all of you guys. Fantastic to have you on. Hey, today I want to talk about the 6 drivers and the 6 drivers when it comes to these big pieces of influence in the property market in Australia. We've chatted about these once or twice before, and I'm sure one or two of you might already have an idea of what they might be. So let's do this. Give us a bit of a shout out in the chat if you think, all right, I know what the major drivers are when it comes to this real estate gig that we're talking about in Australia. What are the main drivers when it comes to value increasing or decreasing? By the way, this is a two-edged sword, goes both ways. 6 drivers and rents increasing, values increasing, those sorts of things. Because we have a little bit of a matrix, a bit of a system we look at the marketplace with, and we try and make the best decisions possible as property investors as we roll. Hey, good morning, Tanya, Danny, and excuse me, Arun. Good morning from Hornsby. Yeah, I used to live right near Hornsby many years ago. I used to work at Knox Grammar School as a teacher. So there you go. It's not the Rona, by the way. Just a cough. There we go. All right, let's have a look at this. We've got a few in there. Jeff's diving in. Yes, absolutely. Interest rates, Jeff. I'm going to get myself a little bit of water here. Just make sure I get this little tickle out of my throat so we don't end up live television or live streaming. Don't know what's going on, folks. But there you go. watching me choke live. All right, so here we go. We've got interest. Oh no, I'm going to mute myself for a second. How funny is that? Anyway, I'm back, and hopefully no more coughing. Maybe I breathed in a little bit of floating dust or something. Anyway, back to the show, folks. Thanks for. I need a little ad, don't I? I need a little back in a moment type ad. So we've got interest rates. Yep, there's a lot of talk about interest rates going up at the moment, and we've got to keep an eye on that. We've had a chat about it. In of recent times, okay? So, what does that look like? And away we go. Interest rates are good. The other one, supply and demand. We've got a supply issue, a hideous supply issue at the moment. We'll talk a little bit about that. What does it look like in your area, where we're investing, those sorts of things. We have politics, all right? I think that's how you spell it. Politics. I think I put the TICS. Politics. The crazy politicians talking about what they're going to do, and they're already starting to rev this up. They're talking about increasing taxes, doing this, doing that, whatever it might be. It has a driver effect in real estate markets. The politicians said, hey, listen, let's do a stimulus when it comes to house building and house. So they created a house boom and a house building issue. It was a positive, and now at the moment, it's actually turned into a bit of a negative for some people when it comes to the pricing of construction at the moment. Okay, so interest rates, supply and demands, politics. As we go, we're talking about infrastructure as an important thing happening in Australia. We're talking about employment and jobs. And last but not least, we're talking about population immigration, all right? So these are the big drivers that drive property values and discussions and conversations. And, if we think about this as a bit of a matrix, where are we right now? Okay, where are we right now? And let's look at the three big cities. Let's look at Bris. Let's look at Melbourne, and let's look at Sydney. And you can do it with all the other cities too, folks. But I'm just doing the East Coast right now. But this is just an example of what we're talking about, right? So interest rates. Actually, I need to hang on. I'll see if I can do it like this. Yeah, look at that. There we go. All right, interest rates. Now, for all of us, is it going to have a positive or negative effect? I don't think it's going to be a real issue for Brisbane. Brisbane's still got some rental capacity, so I think I'm going to call that neutral. I would call it negative in Sydney, and depends on where we are in Melbourne. I would call it neutral to negative. If interest rates go up too high, the rental yield often can't handle the interest rates going up, okay? So I think Brisbane can. I actually think Melbourne can in certain spots, and we'll talk about this, but I don't think Sydney's got much of a chance when it comes to handling an interest rate rise, when it comes to residential real estate and servicing. The prices are high, the rents are low. Got a bit of a challenge, right? So, and I think, if you look at Perth and Adelaide and Canberra and a few of the other cities, they can handle a little bit more interest rate rise easier than the cities that are too expensive, okay? Or the types of properties that are too expensive. Anyway, that's not what today's about. I want to get to the gist of today. Supply and demand. Listen, it's rubbish. It's absolutely rubbish here. It's rubbish there, and it's rubbish there. Like, what is going on? In a positive sense, for us as property investors, driving value, driving prices, driving costs, okay? That's what we're seeing in many of these places. Politics at the moment is a bit of a question mark. It's often a bloody question mark. But anyway, they're looking to get re-elected, and they always make some weird noises when it comes to the election promises. Now, infrastructure, big tick in the box, massive positive for Brisbane. Melbourne's actually got a fair bit going on. Sydney has... I'm going to give it a tick and a cross at the same time because it's not as influential across the whole city when it comes to the infrastructure. Sydney's infrastructure, is on the outskirts when it comes to big jobs. But Brisbane, tell me, folks, what's happening in Brisbane? And we're all getting ready for it right now. And the other one in Melbourne, some of the largest infrastructure projects ever in the country's history. When it comes to the city's infrastructure, those two cities are getting absolutely invested in heavily, okay? So we're talking about jobs, and it's tight in all of those areas. Plenty of jobs being promoted in those spots, but we're talking about population and immigration. What does it look like? So when we have a bit of a matrix here, we go, right, interest rates are positive there. I'd give it a half positive in Melbourne, depending on where you're buying. We've got infrastructure, you've got employment and jobs going your way, et cetera, et cetera. So when we're thinking about what do these big drivers do and how we're positioned in our real estate investing, you guys can get a bit of a picture, right? You can think about it high level, and then we can drill in as we go. So I don't know if the chat's working. Maybe it is, maybe it isn't. Put a little thumbs up or something in the chat for me. See if that's working, because folks, you guys know this, and if you're new like Arun, and if you're listening in for the first time, Brisbane, the Olympics, there's billions of dollars going to be spent on getting prepared for that, and much more. So what do we got right now on our doorstep or affecting us right now? Thanks, Nick. The number one thing that I think's very exciting for this next 1 to 2 years, maybe 3 years, is the immigration need for Australia. We've got a massive skill shortage, huge skill shortage, folks. We've been down on population. We've had a negative population growth for a period of time over COVID, and we need more people in this country, which is there's plenty of debates, but I'm just talking economically. We need taxpayers. We need the population of this country to grow, and we need to have citizens here, contributing to the economy, and that's how this works. Okay, so what does it look like right now? A few things have happened when we're talking immigration. Okay, there you go. You can hardly hear me. Let me see that, Kylie. My end is pretty maxed out and loud, but tell me if it's not working, team. I might see if I can turn mine up a little bit at this end, and as you go. Yeah, and Sam, absolutely. Alison, absolutely. Sam did a podcast last week. Sam did a podcast last week. Get hold of that on the Urban Property Investor about migration and the economics connected and attached to it. We are on the cusp. Ladies and gents, of the second wave, the second push, or the second wind of this property boom, property momentum, growth boom right now. And it's going to come in the form of new focus on immigration and population right now where Australia is on its knees when it comes to our supply chain. We know so many developers right now who have shelved their projects because they can't afford to build them. We wade through hundreds and hundreds and hundreds of deals every month to find the best deals for you guys at Mentoring. And it's interesting to see lots and lots and lots, like significant amount of developers can't make, or builders can't make the projects work, which is going to make it worse, team. It's going to make it worse. We had these approvals numbers, and now the starts are actually falling off the cliff. Anyway, that's another discussion as we go. So get hold of that podcast from Sam. But here's what's going on. February 21, they're unlocking all of the visas that have been backed up. There's about 160,000 of them or something like that. And from July 2022, at this point in time, there's going to be, all right, let's do it. Let's get everyone into the country, okay? And what does that look like when it comes to numbers, team? Now, here's the idea, a couple of different versions of the world when it comes to the number of, people coming into the country and how it's going to happen. Skilled migration is going to be high. According to this one here, we're looking at a minimum of 160,000 people, if not more. The government this is directly from the budget paper. The budget paper is aiming by the end of, we're going to enter into the 2023 financial year, not too far away. And we're looking at, 200,000 plus people over that 12-month period. What is that going to do for us, team? What's that going to do? That's going to drive value. That's going to drive rents. But here's the question. Get your thumbs quick ready in the chat. In the past, I think I just gave it away there, but in the past, these 200,000 people, where have the majority of those people landed? And I don't think it will change this time either. Where has the majority of those people landed as a first port of call in Australia when it comes to immigration, and it goes into the country? So two questions. Where do they first land? And then where is the secondary maneuver that's been happening for a long time as we go? Yeah, I think I gave the answer away. I should have held on to that one. But listen, look at this. 2017, 2018, the majority of people who came from overseas landed in Melbourne and Sydney. Overseas migration is the blue there. Natural increase. And then, by and large, Sydney loses people. And where does it go next? Where do they go next? You can see it on the chart here, team. You can see it on the chart. They come into Sydney and Melbourne. They go, yeah, okay. Yeah, I'm up for it. Mostly they exit from Sydney, according to this historic Melbourne's the best city. Well, Melbourne won the most livable city for 7, 8 years in a row, Nick. There you go. And where do they go, team? Look at this. They go to Brisbane. So this is, and so Sam and I, and the team at Positive have been talking about this for ages. We think the best two towns in the country at this moment in time for major momentum from this population push are going to be Melbourne and Brisbane. Okay, Melbourne and Brisbane. That's what we think. And there's plenty of reasons why. But you can see from the history, it's like, people come into Melbourne, they tend to stay because, according to Nick and many others, I'm sure, it's a good place to live. Melbourne's a great city. And then, hey, if people looking for a bit of sunshine, they head north. And I would say right now for me, that's going to be Gold Coast to the sunny coast as well, up in Brizzy. So listen, folks, keep that in mind. Sorry about my, Gary, right onto it, mate. Like, you just beat me to it. So sorry about my coughing fit right there. Nearly Nearly coughed my lung out on live streaming, the live streaming show, but we made it. We got there. We did it in the end. All right, that's it from me, team. Hopefully that's landing and making sense. You know, how would you use this in your investing? Are you in place in Brisbane and Melbourne? And more importantly, I believe we're on the cusp of a massive rental boom. That's what we firmly believe, and I think this is going to be good. If the interest rates kick up a little, it'll sort of wake everyone up, and it'll probably take 12, 18 months to flow through. But you watch. There will be increases in rents, and our cash flow, team, is going to be good. Don't rush out and lock your interest rates in, though. There's some traps in that if you're still in acquisition phase. I might talk about that, actually, in the next little bit. But there you go. All right, that's it. I'm just rubbing on now. It is 8:33. We're meant to finish at 8:30, but a little bit over time. You guys stay well, stay awesome wherever you are. Join me tomorrow for another Wealth Coffee chat. But we've got some good things coming, team. Be patient. Remember, buy well, never sell. This thing's a marathon, not a sprint. We'll all get there. Stick with it. Stick to the plan. And in 10, 15, 20 years' time, you'll be very happy about what you've achieved as a property investor. That's it from me, team. You guys have an awesome day. Go well. Adios. See you tomorrow. Bye-bye.